All right, guys, it's Paul Singh, the market speculator. I run the swing trading service at bullsonwallstreet.com. Today, we're going to talk about this coronavirus bear market, and specifically, we're going to talk about some trend shifts, some stuff we can trade during the bear market, and some potential trends for after this thing is over, specifically the quarantine that we're all facing right now. And this is a little preview of the course we're going to be doing on April 19th. So if you're interested later, stick around. I'll give you some information on that. But let's take a look here. I've got SPY up here, and I've got three different stocks. That's ZM, which is Zoom, Work, which is Slack, and TDoc, which is Teladoc Health. Now, I'm sure a lot of you are familiar with Zoom and Work, which is Slack, and then some of you might be familiar with TDoc as well. So these are three stocks that we have been calling our coronavirus plays. We actually have some more as well, like Clorox, a bunch of other stuff that are going to do really well during this coronavirus quarantine period. But the reason I've singled out these three stocks is because not only do I expect them to do good during this period, I also expect them to do well after the quarantine is over. The idea here is coming out of this bear market, and almost every bear market has some kind of trend shift, and we get new leaders that emerge out of these bear markets. You can go to 2008, you can go to 1987, you can go to the internet bust and boom of the early 2000s, go all the way back to the Great Depression, 1929, World War II. And by the way, these are all bear markets that we're going to study in depth in that course. But coming out of these things, there are leaders that emerge, and we're looking for trend shifts. So keep your eye out on that. This is not necessarily looking at stocks, but look at the world. Look at what's happening. What do we think is going to happen coming out of this? And a couple of the big trend shifts is there's going to be more stuff done from home. I think that's a given right now. A lot of companies that were hesitant to have their workers work from home are seeing now that we can have these guys work from home. The technology is out there, and only at times do we see no decrease in production, but sometimes we actually see increase in production. There are studies coming out that are showing that. So Work and Zoom specifically hit that market. And then we have TDoc, which is Teladoc Health, which is basically the Zoom and Work of healthcare. So basically with TDoc, you can do virtual medical appointments with your doctor. So kind of the same thing as virtual work. And we're seeing a lot of that right now where, we've had to cancel appointments, but we've still been able to communicate with our doctors through something like TDoc. So obviously these are doing very well during the coronavirus quarantine here, as are companies like Clorox and Hormel and some other things. But the difference between, say, Clorox and Hormel, which will probably go back to what they were doing before once this is all over and we don't need all that extra hygiene and extra canned goods, there are probably going to be some trend shifts where doctors are going to say, hey, you know what, you don't need to come in, let's do it from home. And same goes for Work. And I think these are strong trend shifts, so we should watch these three stocks closely. So we already recapped it, but really quick, let's just make sure we know Zoom is video conferencing. They had some huge subscriber growth. They're up to, I think, 200 million subscribers right now, and just about everybody's using it. Work and even non-Work. We have Teladoc again, which is healthcare, virtual doctor visits. And then we have Slack, which is workplace messaging. Again, all these three things are going to be really impacted by coronavirus and afterwards. But now the question is, how do we trade these things? Just because we like them and we think they're going to go up in the future doesn't mean we just jump into them. So let's talk specifically how to trade them. And we're going to look at this not from the long-term investing perspective, which I think you could do with these things, but let's talk about it as swing traders. The first thing I want you guys to notice is relative strength. Look at how strong these things are compared to what SPY is doing. Look at SPY, pay attention to this blue line. Notice that SPY is below that blue line, while all three of these stocks are above that blue line. We have TDoc here, clearly above that line, and that's a 50-day moving average. We have ZM, which is above that moving average by about 10, 15 points. And then we have Work, which just got back above that level, whereas SPY is way below that level. So that is a clue right there that the stocks are showing relative strength. all three of these things are pretty close to their all-time highs. They've had some pullbacks recently, but they are still on their uptrends, which SPY is not. SPY is in a downtrend. They are in uptrends, and they aren't that far from their all-time highs, all three of these things. So that is telling us that there is relative strength. Now, after relative strength, we need setup triggers. How do we actually trade these things? What are we looking for? And let's take each of these specifically. With actually all of these three now, we're looking at continuation patterns, and within the continuation pattern, breakout pullback. So with Zoom here, we've had actually with Zoom, it would be a trend pullback. So we have a strong trend here. Of course, in any trend, there is going to, especially when this thing has gone this strong, there are going to be strong, violent pullbacks, which we've seen in Zoom, but it has held a key level, which is the 50-day moving average. I love when I see that. I love these really deep pullbacks that scares some people, but then we see a show of strength. We're starting to see that now. What I'm looking specifically for Zoom is for it to remount the 9 EMA. That is one of the specific triggers I look for in these trend pullbacks. Does it hold a level, and then does it remount the fast moving average, which is 9 right here. So if this thing next week can get above 130, there's a good bet I will be in this stock, and we'll be sending out the alert to Bulls on Wall Street members. Then we have work, and it's basically the same pattern, a little more choppy here, but coming off highs, pulling back, remounting the 50-day moving average, and now we're looking for a show of strength above the 9. I want to see a really strong candle here. I don't think the pattern here is as strong as Zoom's, so I want to see a really strong candle above the 9. Let's say this thing closes at 1225.75. I would look to get in there. And then TDOC, essentially the exact same pattern as Zoom. It's pulled back here, a really nice show of strength, didn't quite hit the 50-day moving average, which we could say is even more relative strength because it didn't pull back that far. And then if this thing can cross the 154 level, I think we have a good entry here. So those are the setup trigger, those are the setups and the setup triggers. Now let's talk about one last thing. One of the keys to trading is risk reward. So if we do enter these things, what kind of risk reward are we getting? You know, when I risk $1, I want to make sure I can at least make $2 or $3 on that trade. So if we look at Zoom, let's say we enter this thing at 130. Probably going to place a pretty loose stop because, as you can see, this thing is very volatile. And anytime you have a volatile stock, you want to take that volatility into account and not get chopped out of a good trade. So we're going to use a loose stop here. So if I get in at 130, my stop will probably be all the way down here at 120. And that's pretty rare. Usually I'm not going that deep because if it's hitting this level, I think the pattern is failing. But not so with Zoom. You can see here, look at all the choppiness around here, around this 9 EMA. So we're going to give it some room. Enter at 130, stop at 120, so I'm risking 10 points. So I know I need to get at least 20 points for this to be a good trade. That would be 150 here, and actually my target's going to be at the top of the range, so 165. So essentially, I'm going to be getting 35 points for 10 points of risk, or $10 of risk. So 3.5 to 1. That's fantastic risk reward. I could be right 40% of the time on this type of trade, and I'd be crushing it when I'm getting 3 to 1. So that's Zoom here. Now let's talk about the risk reward on TDOC. Here, let's say we have a 155 entry. I'm probably going to place my stop. It's not quite as volatile as EM, but so let's say 145. So again, 10 points. So at 155, I need to be able to get to 175, which is the top of the range. Not quite as good of risk reward as Zoom, but the one thing that I like about TDOC is because the pullback is shallower, the probability is greater that it can break its high here. So maybe we could even go higher than 2 to 1, but we're at least going to get 2 to 1 here. And then work here, let's say we enter at, I said 25.75 to make it easy, let's say 26. We place a stop at down here at 24. We're risking 2 points. Target range would be right up here at 30, so we're getting more than 2 to 1 on this one as well. So 2 to 1, maybe even higher than 2 to 1 on this if we play for a break of the high. And Zoom is the best of the bunch here at 3.5 to 1. So these are the three stocks. We're going to be going over this type of thing in a lot more in the swing trading, bear market swing trading course. That's going to be taking place April 19th, 20th, and 21st, 3 days. First, I'll give a quick introduction to how I swing trade, which many of you already know, but then we're going to do a really deep dive. We're going to analyze the 1987, the 1929, World War II, the internet boom in the 2000s, the 2008 boom and bust. I've already analyzed all this stuff. I've been studying this stuff for a long time. I traded through two of these. That was the internet boom and bust and the 2007 meltdown. So we're going to do a deep dive into those. We're going to talk about just about every strategy you can do in trading a bear market, exactly what to look for, not only in the bear market, but as we talked about here, the things we can do coming out of the bear market. And that's where you really make your money. So you might have to be patient for a few months, but then when we get that really strong trend, that's when you can crush it. That's what we're going to talk about here on April 19th. There'll be a link in the post. If you have any questions at all, go ahead and shoot me an email, singjd1@aol.com.